Hello, investors and traders, and welcome to the weekly market report with Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the diamonds. That's the Dow Jones Industrial Average ETF. And I'm starting off right here with my lines from last week in place. These lines that I put on the charts, for those of you who are regular followers, I put these lines on the chart and I forecast the markets. And then I leave those lines on the chart for the following week, right up until like we are now recording, so that everyone can see the evidence. And last week I said for the diamonds that we would go down, bounce, and close right there. Now, if you can see that end, it's covered by the candle right there. I'll zoom in for you there. The end of that line is my target. And yesterday, we pegged that perfectly after the market dropped, formed this long shadow, and then it recovered. So what does that mean for next week? Well, in order to forecast for next week, you have to take a look at what happened today. Pretty amazing day, because there was a point in time when this candle was on its low. This was an extremely powerful bearish engulfing pattern that really took up the whole line right here in red. And I was actually talking to one of our coaching students, and I said, you have to wait until the end of the day before you make any decisions, because that bearish engulfing pattern by the end of the day could turn out to be a long shadow, and that would be bullish. And guess what? That's exactly what happened. Now notice right here, we have two successive up days with candles and long shadows, and look at the volume here. The volume is increasing as we close today. That's bullish. All right, so that's a bullish candle known as a hammer. And on high volume, that's even more bullish. Now look down here. The stochastics is starting to turn up after just touching the oversold condition right there. It's turning up. And the CCI, as I magnify that, you'll see that that's not the zero line, that's the bottom of the chart. This green line is minus 100. So when the CCI drops below minus 100, it's oversold. And when it crosses over that green line right there, when it crosses over the minus 100, that's a buy signal. So we're very close to a buy signal. And my forecast for next week for the diamonds is going to be just like that. I'm going to more or less mimic the angle that we had back here, project 5 days out, with the end of that line being my target. I'm going to keep this line up here in place as our resistance point. I think the market will eventually test that again, but the end of the line, like I said, is my 5-day forecast. So if you need a number on that, that's 266.87 for the diamonds. All right, let's take a look at the spiders, ticker symbol SPY. You'll see my forecast last week was that we would move lower. We did that after we moved higher. You see, again, my forecast was that we would move higher. And on Tuesday, look at the high. Isn't that absolutely amazing? It pegged the high right there on the pivot point. We went a little bit higher on Wednesday, pulled back on Thursday, and bounced off this 20-period moving average. So while it did pull back like I said it would, it did not get all the way down to the target. Now look what's happening with the spiders. Again, this was a bearish engulfing pattern at one point during the day. I think what's going to happen is next week we're going to break out over that high. We had good strong earnings today, which prompted the markets right across the board to go higher in the last hour. We had a really strong rally right across the board. And so with this increase in volume on the way up, I'm saying that the buyers are building momentum, and when you see the volume building as you're approaching resistance, that usually signals a breakout that's about to happen. So I'm going with that breakout idea. Look at the stochastics. It's crossing right here. You don't have to worry too much about the stochastics, because if we go into new high territory, the stochastic is going to stay in an overbought condition. What you have to watch for in both the stochastic and the CCI is that once it goes into that overbought territory, you have to start looking for hinges or pullbacks from those high levels. And so if you're taking a long position in any of the spiders or any of the Dow stocks or even the tech stocks, as soon as you see the CCI starting to pull back, that's your signal to go ahead and trail your stop. It doesn't mean exit the position, but you definitely want to trail your stop. So that's the spiders. If we look at the VIX, which is inversely related to the S&P 500, I said we would go up. We did that earlier in the week. We even tested that on Thursday. Didn't get all the way up here. Eventually, I think we'll get up here. But look what's happening with the VIX. We're testing this support level to the penny. Look at how many times we've touched that line and then bounced. Now, the reason I think the VIX is going to break out below that support level, let me erase all these lines and I'll draw it clearly for you. The reason I think we're going to break out below that support level is because of the CCI. You see the CCI hinging lower? This is exactly what I just said. When you start to see that hinging, that's telling us that we're starting to get a shift, and you could see the stochastic is also hinging lower. So I think the VIX is going to drop, go to another level as it finds support. And remember, if the VIX is bearish, the S&P is going to be more bullish. So keep an eye on that VIX. The Russell 2000, we have a more broad-based index made up of more or less small cap stocks. I said we would go down. We did test the 20-period moving average. Again, did not get all the way down here to target. I thought maybe we would fill this gap. Did not do that yet. Again, I think eventually we will fill that gap. But look what's happening on the Russell 2000. Just like what we saw in the Dow, we see this long shadow right here. That is bullish. When we're looking at the markets and trying to forecast our price action, we look at the type of candle first, and we look at the momentum and comparison to that 20-period moving average. So a bounce off of that 20-period moving average, it's more or less acting like a support level. I think that the Russell 2000 is going to go right up and break out of this high that we have here from last week. All right, so that's the Russell 2000. Now, finally, the Qs. This is very interesting. We had a lot of earnings come out, beat earnings. We had Apple and Amazon and such, so the tech stocks are rallying. At one point, again, this was a pretty significant red candle. You don't see this too often. What you don't see, look what happened early on the minute-by-minute chart. Early on, we were down. You see how we opened up? This was the opening of the market. We recovered some of that, and then we set new lows. But look at this. Right around 2:30, the market just stormed up, and that's why we have that long shadow on that candle. Now, again, we have to look at the type of candle. That's a long shadow candle known as a doji. It bounced off the 20-period moving average, and we see that on higher volume. All right, so that higher volume is telling us that the buyers are motivated. So I am going to run a forecast line right up to a resistance point right here. I think we will go up and test that. Whether or not we break out, we'll have to keep an eye on that volume. But I think we will at least go up and test that resistance, because down here you could see stochastics is hinging higher with a cross. Right here, as I magnify that, look at the CCI. That black line is the zero line, aka the momentum line. So when the stochastic is moving up and the CCI is crossing over momentum, generally that means higher prices. So I'm going to stick with that, and we'll see what happens next week. Again, I'll leave those lines in place so you can see the evidence on how well the charts work as a forecasting tool. And I hope you join us each and every week. Have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.